Hi everyone, welcome back. Nice to see you guys. As usual, I will review the macroeconomic calendar and charts and see what we could expect from mayors this week, right? Anyway, when talking about the macroeconomic calendar, I guess there's no need to say that the center of attention this week will be purely on what the Fed will offer this Wednesday. And of course, the Bank of Japan, which will have its economic policy meeting and gave us their decision a few hours later, right? Anyway, give me a second. I'm sharing my screen. Here we are. Okay. Anyway, as I was saying, when it comes to macroeconomic news, the fact is that the market is 100% focused on whatever the Fed may do or not next Wednesday. Uh, Ever since Janet Yellen offered that hawkish rhetoric in the opening remarks in Jackson Hole, the market has been pricing in a rate hike for this year as soon as this September, particularly fueled by the hawkish rhetoric we have seen after that event from many different Fed members. But what happened last week is that we have some wording from Lyle by Brainerd, which is also a member of the Fed, uh, pouring some cold water over hopes of a rate hike, saying that maybe it's not the right timing, that we need a bit more waiting, right? Asking for prudence. That's what exactly she did, sorry, last week. And that put the greenback back on the negative side, mostly because it remembers us that the Fed is not clear of what they want to do. In fact, the Fed has been quite clearly split ever since the past meeting, telling us that have no certain timing for a rate hike. The scale is not balanced to any side right now in between them, okay? Or at least that's the last thing we know. Anyway, hopes of a rate hike, right, revived last Friday when we have a strong inflation reading in the US, which, if you consider that inflation is doing okay and the unemployment rate is well below 5%, for long has been below 5% for most of this year, well, that's if you have just those two pieces of data, well, you will set that is the perfect time for a rate hike. So everything is talking about a hawkish hold these days, saying that the Fed will probably offer a hawkish stance but maintain rates on hold, right? I believe that this is pretty much the market being clueless about what Yellen and company will do this Wednesday. And the market is showing us so because major pairs are trading within range. And today we are seeing some nervous movements all across the board. But anyway, I'm not seeing much definitions going on in there besides the pound, which is breaking lower. Okay, and anyway, I do believe that we will focus on whatever we have Wednesday afternoon, and that will probably set the trend not only for the greenback, right, but for most of the greenback rivals and for the yen, particularly with the ball afterwards, sorry, for the upcoming month. Okay, we have both two central banks, few hours in between, and trends hopefully being defined afterwards. Anyway, and for what it was, today we have building permits and housing starts in the U.S. I always pay attention to the housing data in the United States because it's hard to forget that the housing sector was the base, right, of a crisis in the U.S. that spread like wildfire to the rest of the world starting in 2007, 2008, right? It was the mortgage bubble what triggered that, and improving housing ratings in the U.S. tend to be understood as completely positive for the greenback. We have been seeing good data lately, so I do believe that given that the dollar is having some strength today, the positive figures in here could fuel the rally in the short term, right? For Wednesday, we have the Bank of Japan and the Fed. I'm pretty sure that it's in the other way around. First the Fed and then the Bank of Japan. Anyway, both central banks will probably determine whatever the market will do. As I was saying earlier, the Bank of Japan has been saying for long that there's going to be some kind of action this month, although we are not sure about that. It could cut rates further, sorry, into negative territory, but that will probably harm uh, more banks. So Corolla is not that convinced about cutting rates further into negative territory. We have been talking about buying another kind of bonds, maybe shorter term ones, to uh, uh, to fix the yield curve. Anyway, again, we have no clue of what the Bank of Japan will do. But what I'm seeing lately is some yen strength, and that's probably because uh, the market is expecting the Bank of Japan to be in a disappointment, right? The Bank of Japan tends to promise a lot and do little when the time comes, and the market is already pricing at it. Also, and considering that the Fed will probably maintain its rates on hold, the Japanese yen will probably continue rising, and I won't be surprised if the dollar Japanese yen hits 100 after these two events. Okay, and on the Thursday, we have some wording coming from the ECB's president, Mario Draghi, but honestly, it's not an ECB event, right? So I don't expect it to be much of a market mover, but still, I do believe that the market will be paying a lot of attention to whatever he says because he may hint something about the future. I don't believe there are good chances that we're going to have any hints on Thursday, but well, you never know. You'd rather pay attention to it. And another housing data coming from the US, existing home sales, that's the next event I will be paying attention to. On Friday, we have the new Reserve Bank of Australia governor, Phil Lowe. So it will be interesting because he take the presidency of Australian Central Bank uh, a couple of days ago, starting this week. So this will be his first formal speech, right? So pay attention to him and whatever he may say about economic policies upcoming in Australia, because uh, he could hint if the central bank is ready to cut rates further or not, and therefore trigger some interesting moves during the Asian session. And finally, to close the week, I do believe that the next relevant figure will be the market uh, September figures for Europe and for the Eurozone, sorry, and Germany, right? As usual, this is a measure of how the economic health is going. These are preliminary readings, so they are going to tell us a bit about what to expect from September. I can remember that August figures were a bit disappointing, like if Europe is reacting late to the Brexit, right? So if we get numbers below these expectations, I will probably expect some further euro weakness, upcoming euro weakness. Okay. Anyway, give me a second and let's go back to the charts and see what we have there. Okay, here we are starting with our friend euro dollar. I have this huge sort of triangle going on in here, not a clear figure, but anyway, we have a long-term ascendant trend line coming from November 2015 low around 505, right? And the shorter term at least, also daily descendant trend line coming from this year high around 1615 or so, right? We have been a couple of pips above it a couple of weeks ago, but unable to break higher, and both trend lines are holding. if you use your logic to see this, it's clear that the ascendant one is the largest, right? And therefore, we should expect it to be stronger than this one and pair to break higher. Still, there's not much telling us that the euro dollar can move in a certain direction, right? Particularly if we have a hawkish Fed, right? The case will be favoring rather the downside than the upside. What I can tell in the shorter term and according to the 4-hour charts is that the moving average are all together, right? 20, 100, 200, all in a tight range. That is an indication that the pair is lacking clear directional trend, right? If we make this chart smaller, right? When we have a trend that's moving average tend to go one way, sorry, okay, when we are going higher, right? But when they're all together in the same range, that's a bad signal, right? Because it's telling us nothing. Probably after this we will get some definitions, and seems that we are going to go towards downside. That's the 200 simple moving average, which is the shortest, has break below the largest and is gaining some bearish strength, but not much definitions, as I said at this point. We have an immediate support in the short term around 1160, the other one at 1120, which is August 31st day below. And I do believe that if we break below that level, somehow we will go towards a trend line in the 1060 region. Okay, if we lost that trend line, the next natural probable bearish target is the 110 figure. Okay, that's the lowest I can see it appear for this upcoming days. And well, we have the 112 region where the sellers are now waiting. There were lows in there when the pair was above it with buyers. So, well, of course, some follow through beyond 112 is what we need right now to see the pair recovering ground. There's a sort of a static resistance around 1240, 1250, and the descendant trend line these days around 1280, 1290, right? I'm estimating for the upcoming days, right? So you see that the trend line moves as the time goes by. But anyway, I do believe that this is the key, right? The pair needs to break above this level to gain some further upward potential. And in that case, I could expect it to reach it to the 1366 level, which, if I'm not wrong, is August high. Okay, yeah, it is. Sorry. Anyway, that's for the euro. And for the pound, well, you sorry, the Bank of England has remained on hold. It left doors open for more easing in the future, but economic conditions at this point suggest that the UK is not in the need of a rate cut or another kind of easing in the shorter term. And the Bank of Japan has the Bank of Japan, sorry, the Bank of England, right, has triggered this bearish move in the pound that extends last Thursday, sorry, that extends into today. At this point, the pair has broken below 130 and extended onto this level, and it's holding in there. So, honestly, I'm expecting for some further falls in here, but of course, many of the length of and the strength of this bearish trend will come with whatever the Fed may decide tomorrow, because if we have a really hawkish Fed, right, the pair may retest those post-Brexit lows around 28. In fact, it was 27.93 for me, but anyway, it's the price, so not exact value what I'm looking for with a really hawkish Fed. I forgot to say that if the Fed actually triggers a rate hike tomorrow, we could expect all hell break loose, some huge gaps in trading platforms. So beware of that particular moment, guys. Don't run towards grabbing thousands, hundreds of pips in a second. Let the market cool down and then go for it. But we'll probably see the dollar rising by hundreds against its rivals. Okay. Anyway, back to pound on the short term, we have an immediate support right now around 29, sorry, 29.30. Okay, plenty of highs and lows from August in there, and below that level, I do expect pair to plunge to this region, this low around 28.60, and as I said earlier, 28. Not sure if a pair can break below 28 without a hike in the US, but if it does, the market will be naturally targeting the 125 level. Okay, and again, as the short term 130 is the immediate resistance, right? The level at the psychological level. I see some other resistance, a strong one near 3060, and above this level 3130, 3140 is for me the next level to watch. Okay, this is a probable bullish target if somehow the pair changes course on a dovish US Federal Reserve. Um, as we talked earlier, the Japanese yen has has more chances to go lower, particularly if the Bank of Japan remains on hold, right? And well, the Fed will decide later. So let's see how the things end. But with the Fed on hold and the Bank of Japan disappointing the market, chances are of a move down towards 100. If you take a look at the daily chart, you can't deny there's a clear bearish trend going on, despite during the last couple of weeks the pair has been trading range bound, right? But the movement is being clearly driven by this bearish 100 simple moving average, and it's standing right now around 103.16, 103, yeah, 17. There it is. So that's for me the level to watch for, or the level to recover to talk about more constructive bullish outlook in here, right? But in the meantime, I will favor selling at higher levels and going lower in this particular pair. Shorter term, there's not a clear picture going on in here. As I said, the pair has been ranging. Indicators have been struggling around their midlines for a couple of weeks already with no clear directional trend. The same happens with the moving averages. But what we can see is the pair has been holding the stays around 100, 150, but I don't watch for this low around 100, 120 in here, okay? Early September low, right as the level to watch. Below that level, 100.6 is my name's next support, which is a huge Fibonacci level. And below that level, 100 seems next probable bearish target in the case of a decline, a sharp one, of course. And towards the upside, the pair has been finding some selling interest around 102.40. So this is for me an immediate resistance. An upward acceleration beyond this level can take us up to 103, right? The 103 region in here. And honestly, the next level is at 100 simple moving average in the daily chart, 103.60. I would say that only above that level we can start talking or thinking about 105 in the dollar Japanese yen, but I can't see that at the moment. Okay, anyway, let's go to the OC. Okay, here we are. The fact is that uh, the pair has lost, the pair now, the OC has lost its shine, right? The OC is not as attractive as it was. The bullish momentum has been lost. It has been holding around. But if you take a look at this particular pair compared to any other pair, the Australian dollar has been keeping bearing pretty well with dollar's momentum at some times, and in fact is holding barely 300 pips away from this year high. So for the most, I see a limited downward potential in here, and that could only be reversed if the Fed actually moves rates. I don't expect a hawkish Feds to be enough to put the OC dollar around 72 or something like that. Anyway, overall, I'm not seeing a clear trend in here, but it's consolidating, and as long as above 74.50, which is the 38.2% retracement of this year rally, the rally we had at the beginning of the year, as long as above this level, the downside seems pretty well limited for me. Okay, in the shorter term, right? We have some intermediate support, not a really strong one, around 75.20, 75. Below that level, as I said, 74.40. And if somehow we really break this strong Fibonacci level and not we check some small spikes in the candles like we've seen in here, I would expect the pair to go down to 73.80 or so. A weekly close around that level will probably expose 72.50 for later in this month, but I'm still not seeing the pair so that far away lower at this point. Of course, take into account that the Australian as well as the Canadian dollars are quite linked to whatever happens within commodities and stocks markets. So if we have stronger commodities and stronger stocks, that would probably give the USD some support. Okay. Anyway, the level to watch towards the upside is 76, which is the next Fibonacci resistance. And above that level, I would expect it to recover further. 76.60 price zone, and this highs we have seen around 77.30 are the next bullish targets in the case the pair decides to go higher. And finally, I will take a look at all gold prices. The fact is that, sorry, it has been a terrible winter in here. I have been sick most of the time. Anyway, back to oil prices. The commodity has entered a consolidated stage mid-June, and we're still in there, but we're posting lower highs, right? In general, it's telling me that the pressure is towards the downside, and that's probably the market fears some action coming from the Fed. As I said plenty of times, gold prices are directly related to whatever the Fed may or may not do with rates. So if we have an on-hold Fed, the commodity will probably jump higher. And if we have a really hawkish Fed and a rate hike, even although chances are very limited, the commodity will probably plunge. Okay, and it's trading data, US data, accordingly to that concept. If that US data is supportive of a rate hike, then gold will probably fall. And if US data is uh, disappointing, then the commodity, yes, it's going higher. Anyway, the corrective movement or the consolidative stage has been holding above the 38.2% retracement of the latest bullish run. Sorry. So I do believe that this 1308, 1302, which was the low we set late August, is the support area to follow, right? If we lost that level, then I do see scope for a downward extension down to 87 here and further lower towards 66, 67, which is the next Fibonacci support. Okay. And towards the upside, the key for me stands, of course, we have an immediate support, the resistance, sorry, around 18, another one at 26. But for me, the key is this 1333, 1335 price zone because it's the next Fibonacci level. And if you take a look at smaller time frames, you will see that the price is still around it plenty of times in between the June and today, right? So that's the key. That's the key, and some gains beyond this level could favor a recovery towards 42 first and 56 later if the dollar remains generally weak. Okay. Anyway, guys, that's it for today. Remember, it's all about the central banks. It's all about the Bank of Japan, all about the Fed, and don't run into the market until the dust settles. Okay. Thank you. Bye bye, and see you tomorrow. Yeah, with the live coverage of the Fed. Bye bye. Thank you.